I'm not the sort of guy who gets on here and shares every single new investment that I make. However, I have made a few new investments recently, and I'm going to talk about them right now. And the reason I'm talking about these investments today is because I think there's a lesson out there that you as an investor might be able to learn. A few years ago, my girlfriend gets this really big package in the mail, and I was like, wow, what is that? And she's like, oh, this is my annual skincare haul from this company called, oh, it's upside down. Ha! Bear with me while oh my God, why is it wrapped like this? I could edit this out, but I'm not going to. Elf. Now, I'm the sort of investor who, if it's a company that I know, use, and love, I'm gonna research and I'm probably gonna invest in it. Well, skincare is not something that I know, use, and love, but Sarah is. So I was like, tell me why you like this company. And she gave me the whole spiel. So I asked her to give me the whole spiel about why do you like this company? And she's like, oh, well, their skincare is great. It's affordable. They're trending on social media right now, which definitely piqued my interest. And they're really well known for their dupes. So a high-end skincare company comes out with something and Elf recreates it to make it more affordable for the masses. So I was like, all right, I'm gonna look into the stock. And at the time that I did, it was around $98 to $100 per share, and I was like, okay, I'm gonna make an investment in this company. There's only one problem: I didn't. I kind of forgot. It wasn't on my mind at the time. I was focusing on building up this TikTok account, and it got away from me. That happens. What are you gonna do? However, several months later, I followed up on the stock, and it was almost $200 a share. One of the most common questions that I get asked, is it too late? I missed out on the chance. Is it too late? Should I buy it now or should I wait? And the question that I always ask these people is, let's say you had purchased the stock at around $100 and it's doubled in a couple of months or whatever the time frame is. It's doubled. Let's say you had purchased it. When you're looking at the stock now at $200 a share, what's your move? Would you sell it, take the profits, or would you hold it and let it keep ripping? If the person says, oh, I'd sell it, well, then you have your answer. You think the stock is done based on whatever research you've done, and you don't want to hold it anymore. If you say, oh, no, I'd continue to hold it, well, then you think the stock still has room to grow. So why not then consider buying it at this higher price? I know it's higher, and everyone has this whole, buy low, sell high thing in their mind. But remember, I want to teach you about something else. It's called buy high and sell higher. I looked at Elf, and I said, okay, this is a stock that went from $100 to $200 in a very short period of time. It's up almost 700% in just 5 years. That's massive. They were trending on social media. When that virality cools down, that could impact sales a little bit. If it was me, I'm asking myself this question now, watching the stock at $200. If I had purchased it at $100, would I be selling or would I be holding? And my answer was, I'd probably be selling around here. I think a correction is due, so I didn't buy any. When a company has already grown dramatically in a short period of time, up 600-700% in a 5-year period, and on top of that, they have a viral product. This is like that 1-2 punch where I'm like, okay, things are going to cool off here now. Anyone who bought this stock a year, 2, 3, 4 years ago is probably looking at this thing at all-time highs, going, okay, once the virality cools down and they lose that momentum from social media and profit taking comes in, this thing could drop a little bit. So I waited. Sometimes when a stock pulls back, it isn't the worst thing in the world. It got extremely overvalued. This doesn't mean just because the stock went viral and they had a moment and they were extremely overvalued that the stock is done. It might just mean that the stock returns to a more reasonable valuation, a more reasonable level at which I can enter again and maybe expect some more growth, but maybe a little bit less growth. So let me show you the chart real quick. Here we have Elf, and you can see that it is currently up 37% in the last 12 months. Just for reference, this is what it looked like, 622% over the last 5 years. Now, I was eyeing it somewhere around here in 2023 when it was around $100. You can see it surges all the way up to over the 200s. I think it hit 217. Then the stock dumps, pulls back goes up a little bit more, and then dumps even more. And this is right where I entered. I bought it at 107. Now I'm in ELF. Now, do I expect the stock to go from 100 to 200 again in a very quick period of time? No. But over the long term, yes, I do still think the stock has potential to go higher. But there's another stock. Do I have a hair on my head? Oh my God, has it been on my head the whole time while I've been filming this? That's embarrassing. The other stock that I purchased was Dollar General. Look, this is a stock that has gotten beaten down. But they're down. They're not out. They're huge. They're well known. They're in a lot of places where people live at or below the poverty line. And yes, even though the price at these stores has gone up a little bit, it's still the most affordable option around for many families who are struggling to get by. Dollar General also pays around a 3% dividend, which is fine, but I am interested in the recovery for this stock. They just need some sort of catalyst to make them relevant, to get them back into the mainstream again, right? They have a lot of competition now. Amazon, all the other dollar stores, Five Below, blah, blah, blah. What could happen to Dollar General that would propel them? And then I saw this article literally last night. Elf Beauty announces a partnership with Dollar General. Popular discount retail chain store has been struggling this year amid intense competition from rivals and big box stores like Walmart. Sales were below expectations. Its partnership with Elf is part of a strategy to reinvigorate its brand and drive consumers or customers back to stores. For Elf, the partnership expands its reach into rural markets. So here's what I've done for you. I have these great fundamental analysis templates. Let me just show you. All you have to do is go right here, click on the menu, which is right here, and you will get this fundamental analysis stock fight template. This will allow you to compare similar stocks, different stocks, whatever, side by side. So here on this one, I put up Dollar General and Elf. If you want to look at my research, I pinned a little article right to the top of my homepage right here so you can read a little bit more. Obviously, this video isn't financial advice. I'm not telling you run out and buy these stocks, make these investments, but it is something that you might want to learn a little bit about my thought process when it comes to buying certain investments and how sometimes something really wild happens, like a partnership between the two of them that you didn't expect. All right, smash that follow. Thanks for watching. See you later.